eventually will result in an economic slowdown. So I'm afraid that the bears on this one have a pretty strong argument that concerns me a lot.
You avoid taxation or any sort of, government rules about kidnapping fees or things.
Until we get there, which we're absolutely not.
Hello, and welcome back to Cardano Coin, where we keep you up to date on the most recent and exciting ADA news. We're giving away 1,000 ADA to anyone who watch. All you have to do to be eligible is upvote, subscribe, remark Cardano is king, and watch the video to the conclusion. The winners will be chosen next month and announced on the channel's community page. Bill Gates has been selling his cryptocurrency, Cardano, as well as his assets, in order to prepare for one of the greatest economic catastrophes in history. In this video, I will describe Bill Gates' impact on the cryptocurrency industry. Gates is well known as a CEO, and he excels at capital expansion. Michael Larson, his fund manager, has helped Gates make $50 billion over the last 20 years. Not only did Gates and Larson make billions during the bull run, but they also properly predicted the dot-com bubble during the 2008 crisis. This has enabled him to consistently outperform the S&P wink with tongue sticking out 500 and increase his wealth to new heights. Gates and Larson are now aggressively preparing for what is expected to be one of the worst recessions in history. It is no secret that the U.S. economy is in a difficult situation, with accelerating inflation, the lowest consumer sentiment in history, the Russia-Ukraine war, low consumer savings rates, and record high debt levels. In 2021, the government put trillions of dollars into the economy. In 2022, the government is withdrawing trillions of dollars out of the economy. Gates is particularly concerned about the Fed's contrived trap, which has caused the economy to be smacked by a double-edged sword. One of the sword's edges is increasing inflation. The tremendous quantity of government debt is the other edge. The government now has two options: destroy the U.S. currency or crash the economy, risking bursting the debt bubble. The Fed has chosen the second option, slowing the economy at the risk of an epic collapse. The Fed just raised interest rates by 75 basis points, the greatest rise since 1994. This increase has a significant impact on lowering inflation, but it comes with a significant risk. To begin with, dramatically hiking rates means that borrowing will be much more expensive for company investments in mortgages. Rates on a 30-year fixed-rate mortgage recently climbed by the greatest one-week leap in 35 years. If the interest rate hike slows the economy too much, it has the potential to deflate the present debt bubble, sending the economy into a recession or depression. So, since our last conversation, a minor thing has happened. Russia has invaded Ukraine, and it feels like we're in a new world, with increased energy and food costs for years to come. It's difficult to see how this will be resolved swiftly. What does this tell you about the economy's prospects in the next years? It comes on top of a pandemic in which government debt levels were already quite high, and there had previously been some supply chain issues. As a result, it's likely to exacerbate the inflationary challenges that true economies are experiencing and force interest rates to rise, resulting in an economic downturn. So I'm afraid the bears on this one have a fairly solid case, and that worries me a lot. The bear thesis that Gates is discussing makes perfect sense. An increase in oil prices is significantly connected with recessions. The gray regions in this graphic represent recessionary times in the U.S. economy. You can see how once Brent crude oil prices $100 per barrel, a recession nearly usually follows. Brent crude oil is presently trading at $120 per barrel, indicating that a recession is on the way. Rising oil costs are a tax on consumers, which is why a recession nearly invariably follows when oil prices reach $100. High gas costs pull money directly out of the pockets of customers. This not only leaves the customer with less money to spend, but it also has a significant negative impact on consumer attitude. According to the University of Michigan Consumer Sentiment Index, consumer sentiment is now at its lowest point since the 2008 recession. The economy operates in cycles, with debt levels cyclically peaking and bottoming. Gates and Larson acknowledged that the year 2021 was fraught with uncertainty. A significant economic downturn is on the way, which is the polar opposite of this. Gates and Larson have been adopting a number of hedging measures in anticipation for a collapse in the U.S. stock market. Stock shorting is one of these tactics. Short positions, unlike long ones, are not required to be declared to the public. The SEC is attempting to influence us with a new idea. But, until that happens, we have no idea what stocks Gate is shorting. Having said that, we know Gate has a short position in Tesla stock since Elon stated it himself. Gates portrays himself as a major advocate of environmentally friendly technology, but Musk argues that his Tesla short position contradicts this. Musk announced a multi-billion-dollar short bet on Tesla while professing to help with global warming. To get this done, I think I have some trust concerns with him. Over $1 billion on his Tesla short bet, but he has certainly not closed it out. You want to know how it was $500 million, but then Tesla skyrocketed. So it's now $1.5 billion to $2 billion to finish it. Gates and Musk were set to meet to discuss charity, but hacked correspondence revealed that Gates' Tesla short position prevented the meeting from taking place. On Wednesday, Gates texted 720 to be clear, to which Elon replied, "Great." Gates then notified Elon that he had just landed. "Cool," said Elon. "Do you still have a $500 million short position on Tesla?" Gates admitted to having a short position by stating, "Sorry to report, I haven't closed it out. I'd want to explore charitable opportunities, but I need to check that these leaked messages were real and that Gates' Tesla store position isn't top secret at all." As a result, Tesla shares appreciated significantly in 2021. The increase of NFTs and FT sector boarded your club was the pinnacle of the bubble, rising by hundreds of percent before plummeting by more than 80% in 2 months. While the Ethereum platform has long-term promise, there is no rationale for images of HTB trading for hundreds of thousands of dollars. Gates reportedly chastised the APR Club's board for the lack of usefulness it provided, saying, "I don't know, certainly costly, digital photos of monkeys are going to benefit the world enormously. On this, we can all agree. That's great, Anyway, I'm used to asset classes where, say, a farm or a corporation that makes items has an asset class, and it's 100% predicated on the bigger fool assumption that someone would pay more for it than I do. And where it has, at its core, this anonymity that allows you to circumvent taxation or any type of, official norms regarding abduction, these are things that I'm not involved in, that I'm not long or short. At the time I'm shooting this video, the S&P 500 is still more than 15% higher than its pre-pandemic peak. There's no justification for it. The economy was far stronger before the pandemic arrived, and consumer activity was soaring. And so was the supply side. The epidemic has a major impact on both customers and suppliers. Money printing cannot simply restore economic activity to pre-pandemic levels. The economic impact of the pandemic is still being felt today, and people's behavior in terms of wanting to travel, attend events, or even eat out has been completely altered by fears about this illness. And so, until we can tell people that we're tracking this thing so well that going out to your work, to a car factory, to a construction site, that they are safe enough that, we feel confident you can do those things till we get there, which we certainly aren't, we're not. Nobody should believe that the government has a magic wand. And all of a sudden, the economy is back to where it was before this happened, awaiting either a miraculous treatment with a cure rate of over 95% or widespread use of the vaccine. So we've experienced a demand-side shock as well as a supply-side shock. And the fear of infection, as well as the general wealth implications of many people losing their jobs and entire industries running at a much lower level than in a normal economy, are also influencing demand. In addition to the shaky economic situation, Gates also does not believe the epidemic is gone. According to the Financial Times, we are still at risk of this pandemic spawning a version that is much more transmissive and even more deadly. He went on to add that it's not probable, and he didn't want to be a downer, but there's a better than 5% chance that we haven't seen the worst of this pandemic. So we have not only huge inflation and liabilities, but also a pandemic that might worsen. All of these variables, when combined, place the United States at risk of a terrifying economic and social disaster. When it comes to investment, Gates highlighted productive assets as his specialty. However, he has been selling assets, with his most recent quarterly declaration for the first quarter of 2020 revealing that he sold millions of shares in a range of firms. This includes more than $1.3 billion in Berkshire Hathaway shares, $500 million in Caterpillar stock, and a slew of other equities. To understand why Gates is selling his equities, we must look at Michael Larson's method. Larson is the operations mastermind. He understands how to optimize alpha, often known as risk-adjusted return in the financial industry. During the 2008 recession, the market plummeted dramatically. According to insiders close to Gates, his net worth has decreased somewhat, while Larson's Raj has stayed private. According to public documents, he follows Buffett's investing philosophy. When we look at the firms in his portfolio, we can see that the majority of them are not affected by economic swings. One example is Waste Management stock, which Gates owns $3 billion of since no one is going to start dumping their rubbish because the stock market is down 50%. Diversification into other asset classes is another component of Larson's plan. For two reasons, Gates is the largest private owner of farmland in the United States. High alpha and diversity, farmland averaged a return of more than 11% from 1991 to 2018, with no European negatives. This is because people will not stop eating during a recession. This enables guys to have a high alpha since it provides great profits with little to no risk. Larson is also recognized for investing in non-traditional assets such as private equity, which entails the purchase of private enterprises in a manner similar to farming. Private equity is a sector that regular investors like you and me do not have access to. However, for Gates, private equity is an excellent opportunity to diversify his portfolio further. Please let me know if you're selling stocks like the Gates down below. If you enjoyed this video, please press the like and subscribe buttons. And I hope to see you in the next one.